there. On the local jail side, filling up local jails, that population is going negative, which gives us a little freedom when you look at the system as a whole, hold state prisoners. The bad news about all of that is nobody can really tell you why that is the case. It's a trend, it's happening. You know, we're benefiting from it. It is a breather, but yeah, I wouldn't trust that it's a long-term trend. The other things, when you look down employee compensation, it's not there for 2 years, not properly on the rise in the big issues there. Our fringe benefits, the VRS rates, the governor had raised the possibility back in the August plan whether state employees would need to contribute to that defined benefit program. That issue will have to be looked at. Health insurance will be a big ticket item. Over the last few years, about 10% growth in health insurance. You know, how much you can ask employees to share in this equation with these kinds of things on the bottom line remains to be resolved. So those will be the issues there. On the debt service side, debt service is going to grow. You have $3 to $4 billion authorization for transportation. Sooner or later, those bonds will be issued. The big issue there is how much transportation is taken in to afford the debt service on it. They've cut back and cut back and cut back as they get shortfalls, just like the general fund side. On the general fund side, the spring authorization of $1.8 billion for higher education and state facilities, those buying bonds are starting to online now, and so we'll have issuances there. So debt service will be going up for the foreseeable future. Revenues coming down, debt service going up, puts a squeeze on capacity. I chair the debt advisory capacity committee that will recommend to the governor and the General Assembly of that capacity for the Commonwealth. We were squeezed. We were getting to the point of about $125 million of excess capacity. I suspect that we're going to have some tough slugging in the short run on this. Part of it would be managing the authorizations that we currently have in place. You know, when we schedule to go to debt and managing that cash flow. The other thing is we get a little bit of break on the interest rate side right now, which helps us on the debt capacity side. Capital outlay, debt versus pay-as-you-go. The capital outlay is going to be probably non-existent other than doing what you got to do. The big thing for looking ahead, and I'll jump, is if this is a scenario for broad range cuts going forward. If you got to make those cuts, you look at where the money goes in the general fund. 80% of it in core services, education, health, and human services, public safety programs. So, you can't escape going into core services if you've got to make cuts on the spending side of the ledger. And more importantly, if you look at sort of where the money goes by recipient, you've got about 70% of it that goes to aid to localities or aid to individuals in the way of Medicaid. In the August cuts, as I said, we concentrated on basically the quarter of this pie that was state services. You can't do that on an ongoing basis. You've got to get into the 70%, and that is just the mathematics of the day. What in terms of broad-based cuts, sort of what faces us. So there'll be a lot of dialogue between now and December 17th, but unfortunately for me, the news is not good. The beat goes on. It's going to be tough decisions in order to get this budget in shape, and more importantly, to get it more structurally in balance going down so that we don't have problems with Wall Street. On that note, I am going to, in cheery note, I'm going to end, let Senator Colgan take it there.
Thank you, sir.